Two retirees can earn almost the exact same income, yet one legally pays zero federal income tax, while the other pays far more than necessary. The surprising part? They both follow the law. The difference isn't luck. It isn't a special loophole. And it certainly isn't about being wealthy. It's simply that one person understands a few important tax rules that many retirees never learn. Every year, countless retirees pay more federal income tax than they actually have to. Not because they did anything wrong, but because no one ever showed them how these rules work. Imagine discovering you've been eligible to pay less all along. That's exactly why this matters. In today's video, I'll explain these rules in the simplest way possible, so you can better understand how some retirees legally owe $0 in federal income tax. And make sure you stay until the end, because the final strategy is the one that often makes the biggest difference. And it's the key reason some retirees legally pay nothing, while others unknowingly pay much more. After decades of working, saving, and paying taxes, most people assume retirement taxes work exactly the same way. After all, money is still coming in, so many retirees naturally think, of course, I'll have to keep paying taxes. But that's where many people are caught off guard. They never stop to ask one important question. Am I paying more than I legally have to? For many retirees, the answer is yes, and the reason surprises a lot of people. Every year, retirees pay more federal income tax than necessary, not because they made a mistake, not because they broke any rules. It happens because no one ever explained how retirement taxes really work in simple language. The good news? You don't need to be wealthy. You don't need an expensive accountant. And you don't need special loopholes. You simply need to understand a few basic rules that many retirees overlook. And the first rule is one that can completely change how you think about taxes in retirement. Let's begin. Let's start with something millions of retirees already have, but many never realize how valuable it can be. It's called the standard deduction. Don't let the name sound complicated. Think of it this way. Before the government determines how much federal income tax you owe, it may allow you to keep a certain amount of your income tax-free. Imagine earning retirement income and discovering that not every dollar is even considered for federal income tax. That's what surprises many retirees, and they assume that if money is coming in, they'll automatically owe taxes on all of it. But that's not always true. For some people, this one rule alone can significantly reduce or even eliminate their federal income tax. The exact amount depends on your personal situation and the tax rules in effect for that year. But here's the key takeaway. Never assume that every dollar you receive is automatically taxed. That misunderstanding causes many retirees to believe they'll owe far more tax than they actually do. And we're just getting started. The next strategy involves income that millions of retirees receive every month. Yet many are surprised to learn it isn't always taxed the way they think. One of the biggest retirement tax myths is that every dollar you receive is taxed exactly the same way. Imagine seeing your retirement income deposited into your bank account and assuming every dollar will be taxed the same. That's what many retirees believe, but it isn't always true. In retirement, different types of income can be treated differently for tax purposes. Some may be taxed, some may not, and some may only be partly taxed. And that's where many retirees are caught by surprise. They hear someone say, everything is taxable, and they never question it. As a result, they worry more than they need to, or make important financial decisions based on incorrect information. Understanding where your retirement income comes from could help you avoid paying more federal income tax than necessary. It won't magically eliminate your taxes, but it can make a meaningful difference. And the next strategy is one of the biggest mistakes retirees make. It's not about how much they withdraw, it's about when they withdraw it. Before we move on, let me ask you something. Have you learned at least one thing today that you didn't know before? If you have, there's a good chance it could help you avoid a mistake that costs many retirees money. That's exactly why understanding these basic rules matters. Just a few minutes of learning today could make a meaningful difference when it's time to file your taxes. Now let's keep going. Because the next strategy isn't about earning more money. It's about making smarter decisions with the money you already have. Here's something many retirees never consider. It's not always how much money you withdraw. Sometimes it's when you withdraw it. Imagine filling a glass with water. Pour too much in all at once, and it overflows. Pour it in slowly, and everything fits. Your retirement withdrawals can work in a similar way. And that's where many retirees are caught by surprise. Taking money at different times can affect your taxes differently depending on your situation. Many retirees don't think about timing until they see a larger tax bill than they expected. The good news is that planning ahead, even a little, can sometimes make a meaningful difference. That's why financially prepared retirees don't just think about how much they need. They also think carefully about when they take it. And the next strategy involves something millions of Americans rely on every month, yet very few realize how it can affect their taxes. Let's look at one of the biggest sources of confusion for retirees: Social Security. Ask a group of retirees whether Social Security is taxable, and you'll probably hear several different answers. Some people believe it's always taxed, others believe it's never taxed. The truth is, neither answer is always correct. It depends on your overall financial situation. And that's where many retirees are surprised. Two retirees receiving similar Social Security benefits may end up with very different federal income tax bills. Because of that misunderstanding, some retirees worry about taxes they may not owe, while others are caught off guard when tax season arrives. Understanding how Social Security fits into your overall income can help you make more informed decisions and avoid unnecessary surprises. And now we've reached the final strategy. This is the one that connects everything we've covered and helps explain why some retirees legally owe $0 in federal income tax, while others pay much more than necessary. Throughout this video, we've been building toward one important question. How do some retirees legally end up paying $0 in federal income tax? The answer may surprise you. There isn't one magic trick. The retirees who owe little, or sometimes nothing at all, usually aren't using secret loopholes. They're simply making several smart decisions that work together. They understand that different types of retirement income aren't always taxed the same way. They think carefully about when they take money from their accounts. They make use of deductions and tax benefits they're legally entitled to. And most importantly, they plan ahead instead of waiting until tax season. That's the real difference. It isn't about luck. It isn't about being wealthy. And it isn't about finding a hidden trick on the internet. It's about understanding the rules before making financial decisions. That doesn't mean every retiree can legally pay $0 in federal income tax. Everyone's situation is different, but understanding these strategies can help you avoid paying more tax than the law requires. And before you leave, there's one simple mistake that causes many retirees to miss these opportunities, even when the rules are on their side. Before we wrap up, there's one last thing you should know. Many retirees spend hours looking for ways to save money, but they don't think about taxes until it's time to file their return. By then, many of the choices that could have lowered their tax bill have already been made. That's why the retirees who often pay the least in taxes usually do one thing differently. They plan ahead. They take a little time during the year to understand how their income, withdrawals, and tax rules work together. That doesn't mean they avoid taxes. It means they avoid paying more than they legally owe, and that's a goal every retiree should have. The biggest takeaway from today's video is simple. Paying $0 in federal income tax isn't about finding a secret loophole. It's about understanding the rules, making informed decisions, and planning ahead. If you found this video helpful, be sure to give it a thumbs up, subscribe to the channel, and turn on notifications so you don't miss our future videos on retirement, Social Security, Medicare, and smart tax saving strategies. Thanks for watching, and I'll see you in the next video.